Welcome everybody, this is Hubert here from Trading Strategy Guides, and in today's video we're going to recap some of the things that we discussed in the Fibonacci live webinar that we had some weeks ago, and we will also touch on a few areas where we didn't have a lot of time to go into in too much detail, just reaffirming and reconfirming the basic principles of how to use Fibonacci, and also my personal way of utilizing Fibonacci levels for trading in a way that's I've found most effective, and also that's in a way that's the safest in terms of money management and risk management. So let's get started. Now, the first thing I wanted to do was to just make sure that the basics are fully covered. So that begins with the Fibonacci tool itself. So within MetaTrader 4, you have your Fibonacci tool here, and it won't look like it does on my screen when you just get your MetaTrader platform and you haven't customized it in any way. The lines will look different, and also you will just have the Fibonacci percentages, but there's actually a way that you can set it so that the actual price level of where the Fibonacci line is drawn is showing up as well. So I'm going to teach you how to add Fibonacci levels and also add that price level indication as well. So what we do is we go to the Fib tool and we draw some fibs. Then you double click on the connecting line so that you get these white dots appear, and then you right mouse click so that you get this menu. You go to Fibo properties. So then you have basically access to this options menu, and under the tab Fibo Levels, in the default setting, this will look different. So instead of having the dollar sign and the percentage sign, you will just have, I think, these numbers here, 0.03. So basically in the description column, this is what you will see on your screen. And in the level column, this is the actual value that the program will use to calculate where to draw the lines. And you will have some presets obviously in, like the 38.2 and 50 and so on. And I'll show you how to add them, and I'll also show you how to add these price levels. So in the price levels, all you have to do is go into your description like it's done here already. You can keep obviously the description as you want, because we're at the 0% Fibonacci level here. So you will keep that the same, but all you do is add a percentage sign and a dollar sign after the brackets. So you have to put the description into brackets, and then after that you do these two symbols, and you click add, and then basically what happens is you get the value here. So I've drawn my tool here. Here's my 0 line, and you see at the moment it's indicating at what price level this level is exactly drawn. And you can see how they all change. I extend my Fibonacci tool and all these values change automatically. So if we go back into the menu, and I'll show you without it, then now you just have that value sitting here, your description sitting here without the price value. So that's really all there is to it. I find that it's quite handy to have that in addition. So you just need to go through all your different levels on the list and change that. Then there will be some relevant Fibonacci levels that won't be in the presets either. I believe the default setting, for example, hasn't got the 78.6 or the 88.6 levels, which are lesser Fibonacci levels, but they are still relevant for trading. And also one can add some Fibonacci extensions which makes the sometimes the targets easier because you have it all in the same tool. So again, we go back into a menu with a right mouse click, and if you want to add anything, so you just work out basically, okay, what do I want it to indicate? For the sake of the exercise, because obviously I've got all my levels that I want already in here, I'm just going to use a random number, even though that's not a Fibonacci number. So in this situation, I say, okay, maybe I want a 45% Fibonacci retracement. So under the levels column, you have to put 0.45 in that case. So anything below 100%, you have to put in as 0. whatever, and anything above the 100%, then you would start to put 1. Like here, 1.05 would be 105, etc. So you add that, and then here again in the description, you add what that should be. So in this case, it would be the 45%. That's what I want to show. And then I do my percentage and my dollar, and I click add. And now what you see here appeared, it's the 45% level, and it's got its value here. Of course, I'll erase it because I'm not using this one, but just to show you how it's done. Okay. Okay, so I hope that will help you set this tool up. Oh, and another thing, if you want to change the appearance of it, again, go back into the menu, and here under Style, you can first of all change the color, and then you can also change the style of the line itself. It comes originally with just a clear, thin line. I prefer the dotted line, and that you can choose whichever way you want to. And then on the under Common, when you click under the Common tab and you choose the style of this, that will basically affect how this this line that connects the 0 to the 100 level will be drawn. You can change the color and the appearance of that as well here. Okay, so next is how to draw the Fibonacci tool, how to draw Fibonacci lines correctly. There are several ways of drawing them, but the most common way is what I will show you, because in some ways it's got its advantages to go with the most common way of drawing them, because most traders will draw them like that, and therefore they will use those same levels for trading. So if you start drawing Fibonacci lines in a way that's maybe a bit more unusual, then you will probably get less other traders, less other market players who will see the same thing as you. So therefore, I think sticking to the most standard or traditional way of drawing them makes sense to me. And so basically, in that regard, we always start from the point further in the past towards a point closer to the present moment. So we're starting basically drawing from the left to the right. So say if I wanted to measure this swing, then I could put my 100% line at the beginning here and my 0 line here. And if I just delete that again and I start from the beginning, we have, click on the Fibonacci tool, and you just start drawing from the point of the past towards the point closer to the present moment. Let go at the swing, and you've got it there. And the reason why you start with, why it is useful to have the 100% level here and the 0% level here, is because we're looking for obviously retracement levels in general. So that means of this entire distance, when price comes to 38.2, it means that 38.2% of that entire swing have been retraced, or 50%, etc., etc. So this is basically the way you draw it, the basic tool for finding potential bounce spots for pullbacks. Then for targets, there's two ways that you can go about it. One is, like I said, that you add certain numbers in the minus area, actually, which then will act as target areas. So in this situation, the two that I like the most is the minus 27.2 target. So there would be that whole swing plus 27.2% of that whole swing in addition is where you get to one of the key initial Fibonacci targets. And again, you'd have to go back into here under Fib levels, and I'll show you where it is on my list. There we are. So here, in order to get the minus 27.2 target, you have to put in the level minus 0.272, and then put your description in the way you want, and there you have it. So the key levels that I use are the minus 27.2 and the minus 61.8. There's this one as well, which is I don't really use it that much, so in a way I could probably get rid of it. But again, it's like a sort of, because the 50 level is quite relevant, not because it's a Fibonacci number, but because it is simply the halfway point of swings, and for traders that is an important level both ways, so for a retracement and also for a target. So then we need to come to an alternative way of drawing the fibs for targets, which would basically be, once you have this, once you've got a confirmed bouncing spot. Let me see what I can find here. So if we go over here to the left of the chart, let's see. Just for this example, I'll just make this a very small swing trade here. Okay, zoom in. So you may want to consider, okay, we've got here in this quick example, we have a push from down here up to this high. And then if we wanted to wait, sorry guys, if we wanted to wait for a retracement on a smaller time frame, well, this one came right down to the 61.8 fib and bounced very strongly upwards. So once you have that push happen, and so I'll go to the 4-hour time frame so that you can see that better. Let me just find it again on my chart. Here we are. Okay. So here are our levels. We have our bounce at the 61.8 fib, and maybe for whatever reason you might have analyzed it and said, okay, I'm in a trade, entered somewhere here, price is going your way, good. Okay, where do I exit? Well, you can use the targets that I discussed already, minus 27.2, minus 61.8. In this case, they were temporary stops. You can see here, minus 27.2 was exactly the spot where it briefly paused. And then here it stopped sort of more or less around the minus 50 level. But an alternative is to basically turn the tool around now and start basically taking that first swing where we had it initially the other way around. So we're having now the 100 level here and the 0 level here. And we have, so you have to just put your fibs like this, and then you basically grab the fibs by that central white dot, so that basically the ratio between 0 and 100 stays the same. You're just taking the whole fibs and you start putting it onto the start of where that bounce happened. And then the main target, one of the main targets to look out for is the 161.8 Fibonacci target. And that partially depends on where within the trend structure you are, but the 161.8 target is a really good one as well. And it just basically means you have to turn your fibs around and put essentially, because it's basically a proportional, a relational target that you have in mind, you're keeping the size of this swing via these lines here, via these 2 points. This is exactly still the same size as this swing. And you're saying, okay, relative to this swing, how far will the next swing go? And you have to therefore put it to the start of that next swing to get the potential correct target. And in a way here it overshot a bit, but certainly that was the turnaround spot. After that it went down again. So this is the second way of drawing targets. And I will cover that later on, probably in the second video, in a bit more detail about how to use, how to know when to use which targets. But here just the technicality of the two different ways that you can use the same Fibonacci tool to find different targets. Okay, then the next point is really about trading them. I'm wanting to start to discuss a few things about trading the Fibonacci levels. And overall, my first bit of advice would be to always look at the bigger picture first. You might want to, say, trade on a 1-hour chart or a 15-minute chart, but to get yourself really a bit more established as to what's going on a bigger scale, because the bigger scale will always affect and obviously dominate and rule what's happening on the smaller time frames. So it's always good to start out with looking at the chart from a large perspective, and don't be afraid to look at it from a really big perspective, even though you might not want to trade on that time frame. But it will just give you a better sense of how much room there is for a trend still, and it can avoid one running into support or resistance levels that one didn't see on a smaller time frame. So it's really very important. In this example here, I've got a New Zealand dollar US dollar chart on the daily hour time frame, and if I zoom out just to get a sense of what's happening here, over recent times it's been pretty sideways movement. It's been pretty choppy. We've been in a kind of range. So that's, for example, something that I would be aware of and say, okay, a price is clearly stuck within this kind of price level at the top, but this price level at the bottom, and we've had lots of ups and downs between here. Once you work out some basic levels here, you can then work out, okay, how much room is there within a range. So if you see that price is down here, well, let's talk about the present moment. Maybe we see price was getting close to the top of that range again, and now appears to be falling again. And we can say, okay, there's quite a bit of room here within the range. Of course, we don't know, will it go really down there or not? That will require more detailed analysis. But just to give you a sense of how a bigger time frame can give you a sense of how much space there is for something. So you could say, all right, we are relatively high, we're still in the top third of the range, so room to the downside is pretty good. So then you can at least use that as a starting point to say, okay, maybe I'm happy to take trades to the downside here on a smaller time frame once I wait for pullbacks. And that gives you a good starting point as to say, okay, there is room here. You might want to also look at highlight some key support levels, which is what I've done here. Because these horizontal levels, they are so important. They are, if you think about it, a chart obviously has the vertical axis is the price axis. So horizontal levels are the most important levels that you can have because they are all within the same price. Whereas, say, a trend line crosses obviously many price levels that they are very strong too, but in a way the horizontal support and resistance line are like the basis of price movements, of bounces and breaks and so on. So again, here I've put these support lines in, support and resistance lines, at key points where I can see on the daily chart, because the daily chart has a lot more information than smaller time frames, because obviously more traders have interacted. The candles contain a lot more information than on smaller time frames, so the levels here will be stronger. And you're basically looking for points where you get repeated touches of the same level. And they don't have to be touches with the candle body, but just the wicks. You ideally want as many precise touches as you can get. And in this particular case, we have one touch here, another touch here, another touch here. Then we sort of have two touches that slightly overshoot here. We have another touch here, another two relatively close touches here. So overall, we can say, okay, this seems to be a relevant level on this perspective. And I know be the absolute top, most significant level, but it is one to bear in mind, especially if you're thinking of trading this down. So just keep those lines on your chart, and only once you really don't want to trade in that area anymore, you can maybe get rid of them again. But it's just good to leave them there. And then besides that, I decided, okay, what further support levels are there a bit lower down? So this was another important one that I thought was relevant, with two touches here, again here, here. So it takes a bit of looking and experience to really gauge, okay, where are the key levels, but over time it becomes easier to see them. So while we're looking at these bigger time frames, another really important thing to bear in mind with Fibonacci trading is that it's no good using Fibonacci when price is ranging. Then they don't work. Fibonacci retracements only work when there's a trend in one direction. So if you, for example, wanted to trade this New Zealand US dollar chart on a daily time frame, well, it wouldn't be really good to use Fibonacci, because you can see we have this range, and so the retracements don't really mean very much, because you think, okay, put the retracement on here, but price obviously retraced even lower than this, and it might halt at some retracement levels, but it just doesn't work. Fibonacci retracements are all about pullbacks within a trend. Now, having said that, we can still use Fibonacci in a trend, in a range, but only on a smaller time frame then. So if we now look at for example, this last move within the range, well, on the daily time frame, it's stuck within this range, but on a smaller time frame, actually, this is a whole trend in and of itself. And in that case, we can use the Fibonacci tool as well. And that's where then we connect it back to look at the bigger picture first, see where your support and resistance levels are, and then say, okay, I've got room here to trade while even though price may be stuck in a longer term range, there is enough room on, say, the 1 hour chart to take trades and essentially consider this to be a trend on a smaller time frame. So we now look at this as an example and go to the 1 hour chart, and we get our chart stretched out again. And then I'll just go back to this entire trend. And don't worry about the numbers that you're seeing there for the moment. They were just wave counts from me, so they're not relevant right now. So as you can see, we're now looking at a detail of that move up that you saw on the daily chart. If I zoom out, you might be able to see that a bit better. There we are. So clearly from a daily chart perspective, we had a very nice strong uptrend. And so yeah, of course, on a smaller time frame, there should be enough opportunities to trade that. And so once you've established your key support and resistance levels, then you can look on a smaller time frame and apply your Fibonacci like we said. So I will go into this later on in more detail, but just here, for example, there was a swing here, retraced to the 38.2 Fibonacci and continued up, and so on. If we can go to the next swing, here. So here it didn't really hit a proper level, at least not from that swing. That could be because this is perhaps not the correct subswing. So it might be that actually taking it from here would be more appropriate. That is based again on a wave analysis. In this case, then we again get a bounce from the 38.2 fib. So just to give you a sense of how once you are, oops, sorry, where are we? Over here. Yeah, this is the swing I was looking at. Just to give you a sense of how, yes, you can use Fibonacci, but you have got to bear the scale in mind and be aware that you might run into support and resistance levels. Like, for example, here, in fact, I can just get rid of these fibs. Here, these lines are part of those daily chart support and resistance levels that I drew in, and sure enough, they were respected. So, and of course, these 2 points form part of that line, but obviously there were previous points as well. You could see here it's already respected it, and then again twice here. Okay, so I think this is pretty much it for the first video. I will continue in the following video to go into more details on how and when to use Fibonacci